Time now for Options Insight. I'm Abigail D. Little. Joining me today from the SeaBoat in Chicago is Alan Nuckman of Agora Financial. Alan, happy Friday to you, and great to have you here as always. You know, before we talk about your trading idea, let's talk August, because what an interesting month. Only the second down month for stocks in 2019. Havens having a big month, big rally month, really a risk-off month. Do you think that extends into September and tie it into what you're seeing around options and volatility?
Well, I still am very positive, very bullish in the overall market. We've been trading sideways essentially in August, and today we had a kind of a fake out breakout where we took out those recent tops above 2940 in the S&P. Let's talk about this week, though. All this angst, and we're up 3% on a weekly basis. Like I said, we need some follow-through on today's action. But coming into the day, the S&P was only 3 off the all-time forever high. So I'm still pretty optimistic.
So is this another way of saying that everything that we've seen in August, and maybe even really in 2019 to some degree, is all about noise? Not the gain so much, actually, more the volatility that we saw in May and August. It's more headline noise and whipsaws for stocks?
Well, if you look at the VIX is trading around the 18 handle right now. You know, we were at 25 with this recent spike high, but same old, same old. Continuation of higher lows in the S&P and lower highs in the VIX, which, you know, is very bullish for the overall market.
And beneath the surface, what are you seeing relative to calls and puts? We have some guests saying that it suggests that volatility could spike higher in September, but then really fall off in October for those gains you're talking about longer term.
Right. There's always the risk of a volatility spike or a VIX explosion, as I like to call it, but they've often been temporary. And this is another example where you get this big kick up into some short covering and a squeeze, and then it drifts lower. And that's happened every single time over the last 10 years.
Okay, well, it's certainly going to be interesting to watch. Now let's talk about your trade, SCHLUMBERGER.
SCHLUMBERGER is in a slump. This is a stock that's down 25% in the last 6 months, and it's down 50% in the last 52 weeks. So looking at this from a risk-reward standpoint, it's been trading between 30 and 35, so that target's 40 on the upside, which is 20% up above. I'm looking at the in-the-money call, my same old stock substitution strategy. Buying a January 27.5 call, it's going to cost about $5.50. It's $5 in the money. It's going to act like a stock. You have limited risk. And if we get to that $40 level, that option is going to gain about 125%.
Got to leave it there. Alan Nuckman of Agora Financial, thank you for joining us. From New York, this is Bloomberg.
Today's Options Insight is sponsored by Think or Swim by TD Ameritrade.